What's up, traders? Welcome back. My name is Austin Silver.
My name is Alex.
We really appreciate you guys being with us. Today, we are going to share with you something that Alex and I have been working on for a while here. We're going to talk about the key to consistently profitable trading. And I know there's not a secret or a holy grail that's going to get you from where you are now to where you think trading can take you. But there's something that Alex and I have picked up on in our years of experience, which is what, Alex, like combined almost 10 years now, right? Something like that.
Yep.
Yeah.
Something like that, yep.
Between our combined experience and the coaching that we've done with other traders, there is something that stands out. So we're going to jump into that today. And I have two trade examples that I want to walk through for all of us to really drive home this point. And for me, it always comes back to risk management. And Alex has been a really big influence on me in the way that I manage my trade. So Alex, before we get in, give everybody an overview of how at ASFX we like to manage our trades, the way that we like to look at it, because you explain it so well.
Definitely. So with the ASFX strategy, what makes it 1,000 times unique than any other strategy that you're going to find out there is the fact that we do have rules and a system built around our risk management. Now, it's not just as general as, okay, I'm going to risk 1% a day on these trades or whatever it is out there. We have specific grading setups for each trade because each trade is not the same as the previous trade.
Exactly.
One might not be as probable as the next trade, and you have to take that into consideration when managing your risk. Now, managing the risk also doesn't just play into how much you're willing to risk on it. When you're grading these setups, trade management is just as important as risk management. And I think that's where the ASFX strategy really shines, because depending on how probable the trade is, we manage it differently.
Absolutely. And I feel like it's because we break it up into those two separate buckets of trade management versus risk management. People say the word risk management, it's like a hot buzzword in trading, but they really don't understand what that means. And that's why, like Alex said, we like to separate it into these two different buckets. So the first bucket being the grading system. And that grading system is actually going to tell you how much size to put on each trade. And I like to keep it simple, and I think you do too, Alex, right? Just A, B, and C setups is what you do. No, like
100%.
A plus B. Yeah. The A plus B plus thing, it gets a little crazy. You know what I mean? You can't be
definitely
that critical of it. You have to kind of keep it simple, because simple trading is repeatable, and part of having an edge is that it is repeatable. I've said that many times before. So when we see these setups, we're going to talk about 2 or 3 of them here today. It's really important to have a checklist that you can work through, and as you work through that checklist, it's going to give you the grade that trade setup is. You could call it even like you could say that what that trade is worth. So, for example, if your entire checklist is perfect, and what we like to call it is nothing could be better. The CBB could be better. If nothing could be better, those are those high probability A setups that deserve more size. It's just logic. Versus the C setups that aren't as probable, where there's a lot of things on your checklist that could be better, but the risk reward is still readable. And those C setups are what we're going to talk about today, because I think that's where a lot of people get tripped up. It is really easy to identify those A setups, and they're not often, but it's easy to spot them when you know how to use your checklist. But C setups, I think, is where we see traders find those hiccups. So here, I have a markup of GBP-JPY. This is a trade Alex and I and Ryan also did a recap of this from earlier this week on Monday. This was a great trade. I would say a good chunk of traders, I don't want to say exactly how many, a good amount of traders were able to take advantage of this move. However, because of the way that I manage my C setups by locking my stop loss and profit, I actually got bumped out of this trade right here on this pin back to the entry price. It ended up carrying, as you can see, way higher that day. And now 3 days later, where is it today, Alex? Like 136, like 250 pips higher than it is? Right?
Yeah, about over 300 pips from like our original entries. Yeah, somewhere around there.
Crazy. So with this setup, we saw the potential. It's there. But because it was still a C setup based on the rest of the parameters on my checklist, I had to manage it that way and lock the stop loss. Now, Alex is going to get us to the point here in a second of the secret to consistently profitable trading, but I just want to show you the example on Euro GBP from yesterday. This example, if I can get to the next chart, as you can see, was also a C setup based on the grading system that we use. And this setup ended up with that same potential to come to the downside. There was a lot of potential for this to move lower. This setup ended up coming back, stopping me in profit, just like GJ, and ended up actually chopping sideways and higher as the day went on. So it was good for me to manage it with my stop loss and profit here. But back-to-back days, you can really see how important it is that no matter what potential there is on these setups, you have to treat each grade the same. So if yesterday was a C setup, and we put the stop in profit after we closed at 1R, then we're going to do the same thing here, no matter what. Because, I mean, Alex says it the best, so I'm going to leave it for him. But there is a secret here to consistency. So do you want to explain it, Alex? Because
yeah, definitely. So in my opinion, in my experience trading, the secret to consistent profitable trading isn't trying to bag TPs at full size, because in my experience, there's a lot of like room for error there, where you could get about 3/4 of the way to your TP only for price to reverse back and either stop you out of break even, or if you weren't even smart enough to move your stop loss to break even, potentially take you out at a full loss. Now, what I've experienced and what we do here in ASFX is we piece out of our trades depending on the setup, depending on the grade that the trade is. So for me, since we're speaking specifically about C setups, I think Austin and I have pretty much relatively the same style of managing C setup trades, where we take about 50% off at the 1R level, and then we lock our stop at break even. So for me, that ensures that no matter what, even if my trade only goes 1R and decides to reverse on me, that I'm able to walk out of that trade blue instead of red, or just slightly above red, which is break even. So even though I didn't get my full size, if I like example, if we get to that 1R and I decide to just take off the full amount of my trade, but then the trade keeps going up on me, then I kind of get that FOMO. But if the trade reversed on me, then I'm able to lock in some profit there, right? But I don't know really which way the trade is going to go. So the smartest thing to do is to just always manage it properly, just to ensure that you stay blue at the end of the day.
And it comes from having a system that's tested. If your system wasn't if there wasn't a statistical expectancy that puts you in a probable position over the long run, then you wouldn't be able to manage them that way. It would be, I think, less consistent. But because the system itself has statistics to ground itself in of, hey, this is going to win 7 out of 10 times, your average winner is going to be about twice as big as your average loser. Like, if you have those kind of statistics for whatever system you're using, then I think stepping it up to the point of having exit management skills, like Alex was just saying, where you're closing a certain piece as it moves, in my opinion, it takes trading to a different level of professionalism. And I think it goes hand in hand with even the way we look to get out of our bad trades too, Alex. And maybe this is like a part 2 to the idea of like, what is the secret to consistently profitable trading? It's not just ending the day blue, like you said, like making sure you're winning more trades than you're losing, making sure you're not going up 2R and turning around. I think it's also knowing how to get out of your bad trades. And with the same idea of you saying you don't want to get you're not going to go full size take profit to 4R, 5R, 6R. You're going to piece your way out. You should do the same thing for your exits. As the trade starts to develop against you, if it's not looking good, you can piece yourself out and not get stopped at full size at your stop loss, and that can keep you alive longer. So it's kind of that consistently flexible thing that we took from Dr. Steenbarger, where you're always open-minded to what the chart is telling you, not what you think it could do, but it's also saying like, hey, these are solid rules that are built into my plan of how I'm going to manage this setup dependent upon the grade. There was a trade that you mentioned to me before we started talking. What was it, on Euro AUD from a few weeks ago?
Yeah, so Euro AUD was a trade that I took, I want to say like 3 weeks ago or something like that.
Something like that, yeah.
Yeah, it was a D2 setup. So a D2 in our strategy is a counter trend trade. Now, for me personally, and I know this could differ from person to person who takes trades, for me personally, the moment I trade counter trend, or if I use a D2 signal, it's automatically a C setup. So it's automatically a C setup, no matter what. And it could run for, 30, 40, 100 pips or whatever it is, but I'm going to manage the trade as a C setup. So long story short, when this trade played out, the trade went 145 pips in my favor from ADR low
of course
to ADR max. Yeah. But when I was in that trade, I had no idea that I was going to do that. My expectations were actually very low on the trade, thinking that, okay, this trade can maybe just make it to the 200 EMA and turn around on me, coming back into trend, right? So with that mindset, I didn't go into the mindset of like, okay, this thing's going to run 145 pips. I'm going to hold my whole position in. I went in there with the C setup mindset so that the moment I hit the 1 hour level, I was about 50% out of the trade already. Now the 200 was in my way as well, and that was even below my 2 hour level. It wasn't my 2 hour level yet. So the moment price pinned that 200 EMA, I was 75% out of the trade. Now after that, of course, it like rocketed all the way up to ADR, and I was able to take the full profit there. But even on my way to ADR, I was piecing myself out to the point where by the time it got to ADR, I was only 10% in, right?
Your mindset, I think, is what allows you to execute that so well. Because even as you're explaining that, me and everybody that's listening are probably thinking like, you're going at these trades being so grateful for whatever it gives you. You're not asking for anything too aggressive at all. You're like, oh, you gave me the 200? Good, give me some more. Oh, you gave me the 50? Give me some more. You know what I mean? You're very much the opposite of what most new traders come into the market with. Very much you feel no FOMO. You're like, oh, this is great, this is easy, give me that. I don't want that other stuff, give me the easy stuff. How do you really stay grounded in that every day? I read my trading plan every morning and I have my 10 affirmations that I do. But do you do anything? Because I mean, that is experience, bro. Just the way you explained it.
Yeah, so I think for me, it really does just stem down to experience. Now, when I first started trading, I did start suffering a lot of losses. When I actually look back, they came from the fact that I was trying to hold these trades to immeasurable places. Like I'm thinking like it could run for me forever. Yeah. And what I described earlier in the video, where the trade would get 5, 6, 7 R into my favor, and I would get so greedy. Yes, I would get so greedy, not take any profit off, and it would just turn around on me. And instead of me being able to bag 6 R, I would actually end up with a loss. So imagine that a trade goes in your favor for a good amount of time, but you get greedy, and then you get stopped out at a loss. And that was a habit that I kept building until I joined like the ASFX community. That kind of like, this is how the trade management thing kind of got instilled in me, was when I joined this community, because I had no idea what trade management was. I had no idea what risk management was. And ever since I joined here, that's really the number one contributor to what's kept me profitable.
Patterns work. Like there's systems, there's so many different things that work. But if you can't actually manage the risk well, you're not doing anything. You know what I mean? And it goes back to like it's a mindset, because everybody thinks, you know, the famous Gordon Gekko quote of greed is good. I think greed is good in your energy and in your passion and in your drive, but in the sense of your trading, you should just be grateful that you live in a time where you're able to make money on a computer without any boss or anyone else getting in your way. It is insane. You know what I mean? So if you can humble yourself and sit in that gratitude, then it's like, oh, 20 pips, 1 R, boom, give me that. Oh, 2 R, give me that. You don't ask for the full 100 pip move that, of course, it could potentially go. Like literally, GBP JPY is running 3 days now. Euro JPY was running from my trade last week, and that was on Wednesday. You could have just been long JPY quote pairs. But you can't live like that. You need to, it's a mindset, it's a different approach. So I think we covered this really well, Alex. I'm hoping that everybody listening takes some value out of this. And if you guys have any questions, or if you think there's another step to this that we could add to this true secret of consistently profitable trading, which is, like Alex said, to end every day profitable as much as you can. If you can add anything to that, just drop a comment down below. If you have any questions about what we covered here, or if there, like I said, if there's anything you want to add or talk to Alex and I about, or if there's any topics you want us to cover in future videos, please let us know. I'm seeing a lot of value, or I guess I'm seeing a lot of feedback that you guys are taking value from having multiple people on these conversations. So I think we're going to keep this rolling, Alex. You, me, Ryan, Gwendolyn, Lindsay. We're going to get everybody involved.
Definitely, I enjoy it. I definitely enjoy these type of videos too, where I can kind of like just relay my experience to like more of the newer traders, so that it can pretty much like minimize their mistakes. Like I don't want them to go through the same stuff that I went through.
Exactly.
So that's what I'm trying to show out there. So I think this is a really good way to do it.
It's beautiful, bro. We're here to help everybody. So like I said, if there's anything we can do, drop a comment down below. We're here for you guys. Alex, you're the man, bro. Thank you for this. I appreciate it. And we'll see you guys in the next video.
All right. Take it easy, guys.